Good morning. Welcome to Stock Market Today. It's Tuesday, November 12th, 2019. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today, brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities finished lower in Monday's trading. Pretty quiet session. Treasury market was closed for the Veterans Day holiday in the U.S., and that was after the big backup in bond yields last week. The dollar was weaker on the major crosses. Gold finished down 40 basis points, and WTI crude was down 70 basis points. At the sector level, it was pretty fairly bunched. REITs, industrials, and tech outperformed. Utilities, energy, and healthcare underperformed. As we get to the desk this morning, futures are slightly higher to start the day. Asian markets were mostly higher overnight, with Japan leading, and some stabilization in Hong Kong following a big sell-off on Monday. European equities are trading higher as well. Treasuries are mostly stronger, obviously, as we get back from their three-day weekend. The dollar is seeing modest gains on the major crosses. Gold is off 10 basis points. WTI crude is up 60 basis points. And yeah, it really was a quiet Monday trading, right? Markets just kind of grinding sideways after closing at an all-time high on Friday, capping a 5-week winning streak. Not a ton has changed here in the near term. Key support is at the 200-day moving average around 2,900. Near-term support is near 30.30 and then 29.50. Obviously, those August lows are in play, but quite honestly, they're over 200 points away at this point. So, obviously we want to keep them in mind. Should we test that level? But for all intents and purposes, the key areas that we want to be focused on in the near term, the breakout level at 30.30, and then below that 29.50, and then the 200-day moving average to keep the uptrend in track is at 2,900. Now, the RSI remains in bullish ranges, and that was after failing to become oversold on the most recent test of the 200-day moving average. And Chaikin money flow, is bullish and actually beginning to work its way higher once again. So the indicators support what we're seeing in price action. A little bit of churning activity. Is a pretty busy macro week in terms of speakers. President Trump is going to speak in New York today, and then Chairman Powell at the Fed is going to address Congress beginning tomorrow. So some potential data points, a lot of eyes on both of those speeches here today, especially President Trump and what he could be saying about China and trade. Now, our market in a minute. What are we writing about in the note today to Chaikin Analytics clients? Well, we just touched on the pause near the highs during quiet Monday's trading. The consumer sectors are showing signs of relative weakness, and that's kind of interesting to me because you would think in this risk-on type of environment that discretionary would be outperforming the market and be the staples that are lagging. Well, staples are lagging. So is discretionary. We'll take a look at those charts a little bit later in the show. Financials and industrials can continue to improve as the rotation into cyclicals persists. Technology is the best relative trend in the market, probably the best absolute trend at the sector level as well. Futures point to a slightly higher open here today, as I said. Now let's look at the power bars here. Not a ton changed because of, you can see pretty uneventful trading. The Dow was up 2 basis points. Count them, 2. 3 bulls to 7 bears there. S&P 500, 124 bulls to 93 bears after it lost 20 basis points yesterday. NASDAQ, inline performer, 3117, not much of a change there. Small caps, also an inline performer, 693 to 309. The bond market was closed. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board, however, are mixed. Let's hit our stock of the day now. TriPoint Group, TPH, the ticker symbol there. Closed at 1514, up 73 basis points yesterday. So some nice outperformance on the day. Power gauge rating for TriPoint is very bullish due to very attractive financial metrics, very positive expert activity, strong earnings performance, and strong price volume activity. So the 20 factors roll up to a very bullish rating. We have a strong trend above the rising long-term trend line and a strong industry group, household durables. Market and model are in agreement here, as you can see. We've been on this bullish rating or very bullish rating since July. And since late July, the stock's been an outperformer relative to SPY. And now what do we have here? a pullback to oversold conditions with bullish money flow within the context of an uptrend. This is the setup. When we talk about having an ideal setup, when we talk about having a process, when we talk about buying bullish and very bullish stocks that are outperforming the market, that are in leading industry groups, when they become oversold with bullish money flow, this is it. TPH looks pretty compelling to me as a bullish idea. Now, as always, you'll want to manage your risk whatever way you do that, whether you use chart-based support right here around the 1450 level, whether you use some trailing stop methodology, a percentage or a fixed number, or is the one that I prefer, average true range. Manage your risk, but TriPoint looks like a setup you want to take. TPH as a potential bullish idea here today. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days. Fins at the top of the list. We've been pounding the table that as rates go higher, financials are likely to outperform. The banks have gotten into gear. Financials are outperforming. We'll take a look a little closer. Tech near the top of the list. We like to see that. We'll take a look at the tech relative and absolute chart a little bit later in the show. Materials starting to perk up here, as are the industrials, right? So there's your cyclical / value rotation. Staples, healthcare, comms are middle of the road. Discretionary, we'll take a look at that chart, but it's really lagging. Energy falls back towards the bottom of the list once again. Fundamentals still not great there. We're starting to see some puts and takes and some fits and starts to energy on both an absolute and a relative basis, but the fundamentals just aren't there yet. There's better opportunities in the market. Why would I want to buy the energy stocks that are starting to work a little bit but have bearish fundamentals when I can look at names like financials and industrials, which are also starting to work and have much better fundamentals based on our model. Energy and utilities towards the bottom of the list. Once again, rates go higher, bond proxies under pressure, and they've really broken down now. If you look at my note today where we look at relative strength, you can see clear breakdowns across time frames in the bond proxies. We'd been bullish on them a few weeks ago. We backed off that bullish view. Now, just let them play out. If you're looking for bearish opportunities, there may be some, but for me, I just prefer to just leave them alone. Our industry in focus today, insurance services. Past 6 months, been an underperformer. Right, this is another example of a group that went from being a big leader to now underperforming, lagging in the S&P 500 by 2.95%. Power bar ratio still strong, 19-3, but market and model no longer in agreement. Currently ranked number 4 of 21 subsectors, having moved down 3 slots over the past week. Hartford, HIG, American Equity, AEL, and First American Financial, FAF, all have very bullish ratings if you wanted to take a look. But here's what I mean. We have a former leader, now a big underperformer. Rating for KIE, the insurance ETF, has turned neutral. Trend is still strong as it is above a rising long-term trend line. That's the absolute trend, right? So I'm not saying you can't make money here, but the group's underperforming, meaning there are probably better opportunities out there. At the same time, it's oversold, it's overbought, money flow is bullish. It's really a mixed bag at best for insurance. But what's interesting to me is we go from this big outperformance, and we liked a lot of insurance names during this stretch, to now underperforming, solidly mixed, lukewarm. There may be some individual stock opportunities that you can look for, but what appears to be happening in my eyes is within the financials, we're seeing a rotation out of insurance. Now, we've talked about this, out of insurance and into the banks as rates have been moving higher. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Walgreens Boots up 5% as they have been approached by KKR for a potential leverage buyout, i.e. take the company private. NVR, a little bit of a rebound. Remember last week, the home builder stocks, the housing stocks were under a lot of pressure. They started to rebound a little bit yesterday. NVR was up 4.88%. Boeing, some commentary that they may be able to resume deliveries of the 737 MAX, sent that stock higher by 4.5% yesterday. And I would note that the industrial space is beginning to outperform without Boeing. If Boeing gets into gear, I think you're going to see a lot of money flow into the industrials. MKTX, market access, no real news to send that stock higher by 3.63% yesterday. Viacom traded higher with the media space, up 3% on the day. Loser side of the board, Newell. Those consumer stocks are under pressure. Newell down 4%. Win, part of a group of stocks leveraged to gaming in Macau that were weaker yesterday. CNP, no real news there. CNP lower by 3.75%. Freeport McMoran sold a stake in a business. Stock was lower by 3.75%. And I didn't see any real news on Cabot, COG rather, Cabot Oil and Gas down 3.5% on the day yesterday. Still a bearish stock in that energy complex. Let's start to look at the charts here. It's Tuesday, it's relative strength day, and I'm taking a little bit of a different approach today because there's actually a lot that I want to discuss, and I want to fit it in on all the charts. Here are the consumer sectors under relative pressure. Now, remember what I said. We've seen this defensive to cyclical rotation. So I'm not surprised to see the staples relative to the S&P 500 breaking down, right? Here's the staples. When the line is rising, staples are outperforming. Now they've broken down and are heading lower. Staples are underperforming. Defensive areas of the market have been underperforming of late. We've been pounding the table on that. You've heard me talk about it. What's interesting to me is that the discretionary looks much the same. All right, so if we want to start to extrapolate a little bit, right, we've been getting maybe there's some conflicting data points out there as it relates to the consumer. All indications from economic numbers are that the consumer has been strong, but both consumer sectors are breaking down relative to the market. I think that's something we want to keep an eye on. Either way, from a sector rotation standpoint, there's no denying the fact that money is rotating out of the consumer areas. No need to be focused on them. If you're looking for ideas, I just kind of wanted to point that out here. I thought it was really interesting that both of these consumer areas are breaking down on a relative basis. This is XLY relative to SPY. They're breaking down at the same time. So that's kind of interesting to me. What does it mean for you? If you're looking for long ideas, just avoid these two groups. Start to focus on groups like these two. The most interesting new trends, the financials and the industrials, as far as I'm concerned, very similar, right? And this is part of that defensive to cyclical rotation. This is part of that growth to value rotation. You have in the top panel, the industrials relative to the broader market. You can see that the industrials were underperforming for much of 2019 before going into this consolidation. And now they are breaking topside from the consolidation. And remember, this move is predominantly without Boeing. If you look at a chart of Boeing, it's still stuck in a range. It had a great day yesterday, but Boeing's a big weight in the industrials, and it hasn't really been outperforming the market. Imagine if Boeing gets in gear, you'll see this line continue to move higher if that's the case. Either way, I think if you're looking for long ideas, you're not looking here. You're looking here. You want to look at the industrial. Same with the financials. Now, we've been pounding the table on this for the past couple of weeks, and here it is playing out. What's interesting to me is we've been talking about it for the past few weeks, but the breakout's new. The breakout is just in the past week or so, right? Here's the financials underperforming the market for much of 2019, right? Consolidation at best, and now we're breaking topside as rates have gone higher, and a lot of this is being driven by the banks, right? When you look at your sector work, whether you're looking at the industrials, whether you're looking at the financials, it always makes sense to drill down a little bit further. Go find the industries now within these sectors that are outperforming. I showed you insurance earlier. Insurance is not where you want to be within the financials. It was where you wanted to be, past tense. Now we're seeing the rotation. Start to pay attention to some of the banks, both large and small, and you'll see better relative trends in the bank stocks. But I think these are two of the most interesting trends from a sector rotation standpoint in the market currently. And I think the best trend in the market is technology, both on an absolute and relative basis. Here's XLK relative to the SPY, breaking topside and moving higher above a 200-day moving average, while the RSI of the ratio holds bullish ranges. And on an absolute basis, look at just the textbook uptrend. XLK in a textbook uptrend and is breaking out on a relative basis. I think you want to continue to focus on tech for ideas. That's going to wrap it up for today. I'll see you tomorrow, everyone.